All right. Hello, everyone. Welcome to this morning's market preview. There's going to be a lot going on this week. There's not really much movement yet, but there's a lot of earnings this week. I think about 1/3 of the companies in the S&P 500 report. So that could get things moving. And a lot of it is the big tech world. Now, I am going to just show you what price levels we should be focusing on some of these important things. Now, I'm a little frustrated, I will admit. Someone contacted or suggested to someone on our marketing team over here that, oh, Mark spends too much time talking about price levels. Well, guess what? What do you think real traders do? Okay, in the institutional trading world where I was for 20 some odd years, real traders look at price levels. We're not looking at Elliott wave or Gann theory or the triple Lindy pattern. We're not making baskets. We're not painting with watercolors. This is what traders do. If you can't figure out that you need to know where the important levels are to make money, then you should just go do something else because you're never going to be a successful trader. I mean, look at this. Do you need to be a market guru to see that, oh, 416 level is important for the S&P 500 or for the spider? Gee, it got to resistance here and it got to resistance here. So if you were an astute trader and you bought shares at a support level and you said, oh, it's gone to a resistance level, I'm going to sell, okay? And you would have profited. For instance, we have support here, we have support here. It's like, knowing where these levels are, it's like your map to the markets. We can see here that this level here was support, became resistance here. Why would support turn into resistance? Well, there's people who bought here who regret doing so when the price fell and they tell themselves they want to get out, but they're only going to get out if they get out at break even. So they place their sell orders where their buy orders were. All right? That's an important level. For some reason, 408 is an important level. It's not 407, it's not 406, it's not 409. All right? Knowing where the levels are is the key to making success. This is not about tricks or coming up with magical models that always work because there's no such thing. Every trader in the history of mankind takes losses. The difference between a good trader and a bad trader is the good traders don't take big losses. They get out of their bad positions when it's a small loss and they have the fortitude to move on to something else. All right, so anyway, we get some good earnings. The market moves higher. Look for resistance around 416. We look Market moves lower, look for support around 408 if we get bad earnings. Now notice this, right? When we get to these resistance and support levels, what happens? Things tend to make moves off of them, right? This is because say you want to buy, well, what is support it, right? It's a large group of investors who are looking to pay at or close to the same price for new shares. So they're watching the stock trend lower, and all of a sudden it stops trending lower because it's at support, and they say to themselves, oh, gee, there must be some other buyers around. That's why the market's not moving any lower. I better increase the amount I'm willing to pay, or someone might outbid me, right? You got to have the highest bid if you want the sellers to come to you. So look what happens. We get to support and we bounce. Tradable move, right? Tradable move. We get to support and we bounce. Tradable move. The opposite happens when we get to resistance. People are thinking, all right, I want to sell. I'm just going to wait for the price to keep going up. What is resistance? It's a large group of investors who are trying to sell at or close to the same price. So the market's moving higher, and all of a sudden it stops moving higher, and some of the sellers start to say, oh boy, there must be other sellers around. That's why the market's not moving any higher. And they start to get afraid that they'll miss being able to sell, so they start to undercut each other's prices, and you get this snowball effect, right? So when we get to an important price level, we tend to either reverse or make a move through it. It's pretty rare that we hang around the level. Even this is kind of rare, and this is only a week. I mean, it's not like we're talking about a long time period. So the good traders let the market tell them what to do. They don't guess. How does the market talk to you? Well, by how it acts when it gets to these important price levels. Now, a lot of our earnings are in tech, right? Once again, we can see important levels, resistance became resistance again. Then we get to resistance and we sell off because the sellers or the investors who want to sell start to get freaked out that they're not going to be able to sell. Why would there be resistance at a former peak? Well, there are people who bought back here who regret doing so when the price went lower, And they tell themselves, man, if this ever gets back up to where I can get out at break even, I'm going to. So when we finally get back there, we have these remorseful buyers placing sell orders, and if there's enough of them, it becomes a resistance level again. What do we have here? Resistance became support. How could a level that was resistance become support? Look, it happened here. Resistance, resistance became support in here, right? Well, guess what? This happens because of seller's remorse. There's investors who sold and they regret doing so when the price goes higher, and a lot of them tell themselves, I'm going to buy my shares back, but only if I can get them for the same price I sold them at. So we have remorseful sellers placing buy orders at the level that was resistance. If there's enough of these remorseful sellers placing buy orders, the level turns from resistance into support. So if we get down here, this is the 144 level, yeah, there's a good chance we get a bounce. If the earnings are good and we move higher and we get to 151, there's a good chance we get a bit of a sell-off. All right, it's all about looking at where these important levels are, or understanding where these important levels are and why they're important. Here's our financials. Support has become resistance. Now, how could this seemingly amazing thing happen? Well, this is because of buyer's remorse. There's people who bought here who regret doing so when the price goes lower. They tell themselves if they can get out of break even, they're going to. So when the price moves back up to the price they bought at, you have these remorseful buyers placing sellers. And if there's enough of them, then the level converts from support into resistance. So this is going to be an important thing to watch here too. If this really starts to fade, meaning finally the sellers or the investors who want to sell start to get anxious or get worried, well, there's a good chance that this starts to accelerate on the downside. And then you could look at puts of various financial stocks. You could look at the FAZ ETF, which is designed to trade inversely to what the financial sector is doing. Remember, there's a lot of different ways to make money, okay? A big part of trading is figuring out what's the best bang for your buck. Are you going to make more money buying puts on, hypothetically speaking, some bank, or maybe you can buy calls on the inverse ETF that's leveraged because it'll go up. I mean, it's up to you to kind of decide what fits your strategy, but there's a lot of different ways to profit when we get the direction correct. Now, speaking of something that looks like it's about to make a move, let's look at advanced micro devices. What do we see here? Resistance became support. Seller's remorse. People sell, they regret doing so, they say they're going to buy their shares back. You don't need to be a market guru or a former hedge fund trader to see that this 77 level is important. Why is it not 76 or 79? I don't know, but I don't need to know. For whatever reason, the stock happens to like this level. Resistance became support. Resistance has become support. Now, once again, when we get to these important levels, we tend to make moves. If we break down, there's a good chance AMD gets right back down to 77, right? Because there's really nothing that's that important of a level in between this price range. Support is a large group of investors looking to buy. If the price gets below that support level and stays there, well, what does that tell us? It tells us that those investors who wanted to buy, who created the support with their buy orders, are out of the market. So anytime you take, they cancel their orders or they finish the order. So anytime you take supply out of a market, anytime you take demand out of a market, it sets the stage for the price to move lower. The sellers aren't going to be able to find enough buyers to absorb all their shares, so they're going to be forced to offer their shares out at a discount, and that puts us into a downtrend. Now, of course, if the support holds, all right, some of the buyers will start to get anxious and they'll start to outbid the other buyers, and that'll push us into an uptrend. All right, so this thing looks like it's going to move. If you're a options trader, some kind of a combination strategy here, like a straddle or a strangle, might be appropriate. But when something gets to an important level, they tend not to hang out there too long. Like look at right here. We got here 2 or 3 days later, sell off. Here we just blasted right through it. So this move here shows us that the investors who created this resistance are out of the market. They either finished or canceled their order. So the buyers are forced to pay premiums to get sellers off the sidelines. That forces us into an uptrend. All right. But anyway, now we're back down here. This level has been support for the past 3 days. This is an important thing to keep an eye on because there's a good chance we're going to get a good size move. All right, then last here I want to talk about is Tesla, which is pretty much the most heavily traded stock in the market, pretty much every day. Now, notice how we have a gap up. Well, there's a chance we could gap down. What is there's an old saying, gaps refill, all right? And this could end up being a perfect example. Now, what did we talk about? What's one of the reasons for support? Remorseful sellers trying to buy their shares back, all right? When we gap through a level, there's no trading. So if there's no trading, there's no one selling who could potentially be remorseful. So there might be a lack of support in here or a lack of buy orders. So if people come in and start selling, well, there's not going to be enough buyers to absorb their shares. They're going to have to offer their shares at a discount, and this forces us into a downtrend. All right. So those are just 5 things to look at. Please make sure you subscribe to our YouTube page here, and I will talk to you soon. Thank you, everybody.